Right now, the BlackRocks of the world, they are buying Bitcoin. What are they buying next? If you want to take opportunities of fast growth, it's always going to be in altcoins.
When do we think this is going to happen?
We generally believe that by Q4 and early Q1, actually markets are going to be up for recovery.
Where are we with AI and blockchain?
The powerful and really fascinating thing about AI with a token is that for the first time, an AI has true agency because it has true power, because it can mint a token, meaning that we can now work for an AI. In the last 4 years, something like $48 billion worth of airdrops were given to users. What's the difference between paid by protocol and being paid by an AI agent? Effectively nothing from the end user standpoint. Tokens broadly are the best bet for a regular person to hedge themselves against the future of AI.
Give me the 5-year out perspective of what Animoca might look like.
Animoca is much more than a gaming company. In 573 portfolio companies, billions of dollars of assets under management. Some people have actually described us as the MicroStrategy of alts.
I always say that you are the next Elon Musk. I like how you look at the arts and the cultures and the delights, because ultimately the biggest asset class is culture.
If you have a weak culture, you have a weak community. And we buy things to be members of those communities. And then the money part augments it. We don't talk about the billionaires who made more money than the other billionaires. We talked about the ones who changed the world, who made an impact, who did great things, who helped society. And I think ultimately that's what we all want.
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
Hi, it's Brian Rose from London Real. You probably know that we've just recently been re-platformed on YouTube after 25 months completely in the dark. The truth is, I really need your help. What I really need you to do is click on that subscribe button right now, like this video, and maybe even leave a comment or share the link with friends. We're really fighting against an algorithm that's tried to keep us quiet for so long. And the more subscribers we have, the more people watch our content, the better guests we can bring you, the better content, and we can continue transforming lives. We've been doing this for 14 years now. I want to do this for another 14 years, but I really need your help. So click on that subscribe button, like the video, leave a comment, share this, and we're going to continue to bring you more and more great content. Thank you. This is London Real. I am Brian Rose. My guest today is Yat Siu, the entrepreneur, investor, business leader, and gaming pioneer. You are the co-founder and executive chairman of Animoca Brands, the global leader in entertainment, gamification, and Web3 innovation. To date, you've invested in over 500 blockchain companies, all part of your grand vision to build an open metaverse and a decentralized digital future where value flows to users, not just platforms. You've said that blockchain isn't just a financial technology, it's a cultural one, enabling new forms of digital ownership, identity, and expression. You believe that true digital property rights are the foundation for freedom, creativity, and economic opportunity in the 21st century, and that the open metaverse will be the infrastructure that powers the next billion creators. Just recently, you said that after years of regulatory hostility, the U.S. now represents the biggest and fastest growing opportunity in crypto as builders, investors, and innovators finally return. Ultimately, you believe that tokens aren't just tech. They're a better way to build communities, fund ideas, and scale culture. Yat, welcome back to London Real for the 7th time.
Thank you so much for having me again for the 7th time. It's always wonderful to be here.
You know, we were just talking about it. 4 years ago was our first interview. We did it remote because at the time I think everyone was locked down.
It was COVID, so we had to do it over video.
We had to, and I literally didn't know what the metaverse was, and you actually explained it to me on that call and started this crazy adventure that we've been on and the world's been on. So it's always a pleasure to have you back here. So many things to talk about today because the world is changing, exponentially, it seems. Maybe we first talk about the USA, the Trump administration, and what I hear, this upcoming Animoca IPO in the States that was recently posted in the news. Talk to me about all those things.
Well, okay. So maybe let's quickly on the Animoca IPO and just what we want to do in the US. So as I had said earlier, the US represents probably the biggest, most important opportunity in the crypto Web3 space. And that has a lot to do with the regulatory shift. It has also a lot to do with the sort of pent-up demand that the US actually and US people want to have around crypto and blockchain. And I think the thing is also for us as a business, it's an unusual time when you think about it, because normally speaking, when you think about the US, it usually tends to be leading in the technology sector. I can't think of any sector in technology, or really in any industry, safe manufacturing, that kind of stuff, which is sort of industrial age type of stuff, where America isn't leading. But in crypto, it is not. There is no real peer to Animoca for the time being. Even when you look at exchanges, right? Sure, Coinbase is a wonderfully large exchange, but in comparison to the trading volumes of a Binance, for instance, or OKX or Bybit, they're actually much, much smaller. Or if you look at Upbit in Korea, they're much smaller in comparison. So again, because the US had such a heavy-handed regulatory environment, they've kind of stopped the development of crypto for such a long time, despite its market size and its sort of pent-up demand. And so for this scenario, we and other companies actually happen to have a leadership position without a real sort of American peer for the time being, which represents an opportunity for companies like us to actually look at the American opportunity, to invest in America. We already have quite a few portfolio companies, but we stayed away from the US for all those reasons. And now it makes sense for us to come back there. So does it mean that we're going to go public in the US? It's certainly one very serious contender, given liquidity in markets. And of course, when you look at all of the sort of recent IPOs that took place, especially Circle, for instance, they've done phenomenally well. So as a result, of course, we need to look at that market seriously as well. Had you asked me this question 6 to 9 months earlier, I was like, US, no way, right? And now, of course, we have to take that seriously, right? And having just completed our sort of 21 audit, actually that opens up the pathway to the closing of the remaining audits, basically helping us essentially get into sort of a final track to sort of an IPO. But quickly to the question on the US. So when Trump obviously became president, all the markets rallied in crypto. But then, of course, there were also these funny things that happened, such as the Trump coin, the Melania coin as well, and then all the tariffs. And of course, most recently, what's happening in Iran and with Israel and so on. One thing that he has definitely introduced is a whole lot of volatility in the market and things that you can't really predict. And while crypto has been moving up and down, of course, as the rest of the global markets have, Bitcoin has still broadly stayed at about 100,000 plus, give or take, right? So it's actually been fairly resilient. And if there's one thing that I think the audiences in crypto and in blockchain are accustomed to, it's that kind of volatility. And I would also say that, I think I mentioned this earlier in the show with you, we live in very volatile times all the time anyway, and what capitalism does, it just shows you where the attention is at that moment in time. So where the price action is, whether the price is up or down, is actually a form of information. It tells you something about what's going on in the world. And the fact that, for instance, Bitcoin has stayed fairly stable tells you a little bit about sort of what is that asset class. It's not as volatile. Maybe that becomes a sort of quasi-safe haven, even though it's considered a risk-on asset. Actually, of the risk-on assets, maybe it's considered a good hedge. And you're kind of seeing that because in these markets, why is Bitcoin not at like 70 or 80, as some people have predicted, is actually still floating at about 100, for instance. So you can kind of see where that's developing as well. So that to me says more about that state of where people are in terms of blockchain and crypto than necessarily sort of what happened to all the other tokens in the market, right? Now, the entire space is still in excess of about $3 trillion, despite all of that, which when you compare, again, to 3 or 4 years ago, is in some cases, anywhere from 2 to 3 times up, right? So again, very, very positive signals. But what does it mean? I think really the US policies with the passing of the Genius Act as well, with things like the Circle IPO, I think the Markets Act is being considered at this moment in time as well, right? The US is going to really sort of push forward the crypto agenda worldwide. Imagine if you're a US trading partner, you're somewhere around the world, call it, I don't know, Malaysia or, some place in the Middle East or whatever that doesn't yet have sort of, crypto regulation, or say even India, major partner of the US as well, right? And sort of you now have a stablecoin issued by a bank because of the, Stablecoin Act. So that means, we should be expecting JP Morgan coins or Citibank coins, and they're going to send that over across essentially to you as a client or as a customer. And the receiving bank is like, what do I do with this? I can't receive it. I don't have regulation. I don't have a structure for it. It forces every government to quickly accelerate just so they can do business with the US, right? And when you think about the sort of way that technology was adopted worldwide, the internet really started global adoption because the world wanted to get the information and trade and interact with America. If you might remember back in the early days, every major country was trying to build their own intranet, as in an intranet of internets, right? Like China had this version, for instance, and other places tried to build sort of a local internet. It didn't work out because at the end of the day, sort of, global free trade and information, essentially free information ended up succeeding, right? Even the fact that there's a firewall in China, at the end of the day, if you're Chinese and you want to have access to American news or content, you know how to get that, right? So the fact is that the internet spread because of people wanting to do business or trade with America, whether it's for money, for value, or for information. And that happened earlier, by the way, with things like telex and the fax machine. Again, worldwide, companies were adopting that technology so they could do business with the US. And the same will happen with crypto and stablecoin. The rest of the world will have to move very, very quickly. Places like Hong Kong and, of course, Dubai, are already somewhat ahead, but the rest of the world is far behind. And now they have to play catch up because of the fact that the US has leapfrogged everyone pretty much, with the exception of Hong Kong, by having passed essentially a stablecoin act ahead of most other countries.
Okay. Lots to unpack there, but let's first talk about stablecoins. Circle IPO. First of all, before they IPO'd, there were rumors it was going to be acquired, by Coinbase or maybe someone else.
Well, Tether.
Yeah, exactly. Tether was maybe going to acquire it.
Yeah, that was part of the rumors. Yeah, exactly.
And it was, I think it was priced IPO $31 at around, I think it was $7 billion. Mm-hmm. And then it's just gone up and up and up and up. I think currently, as we're speaking, it's at a $55 billion market cap, which is like 8x. And it's even up in pre-market trading this morning. On a company that didn't have anywhere near the EBITDA that Tether had. I think Tether was like 11 or $12 billion. I think Circle was under $1 billion because they spent so much money on BD. And look, you see them at the conferences, they got the big booths.
Yeah.
That's not cheap.
Well, they're building market share. Exactly.
Yeah. Yes. And so, but this thing just kept going and going and going. Why is that been up so much? And then you talked about the IPO successes. I mean, our good friend Dan Tapiero runs some incredible funds.
He's also our investor.
Exactly. He's invested in you. And, he keeps texting me. It's like every other day there's a new IPO. So Deribit was the derivatives exchange that he sold to Coinbase. He's got Kraken IPO coming up soon. Obviously the Circle IPO is happening. And, he's got a whole portfolio of companies that might also IPO. So I guess there's a tremendous hunger for exposure to these companies. But maybe let's talk Circle. Did that surprise you? Obviously the Genius Act passed around then, but we all thought it was going to pass. And so is Wall Street now seeing this? Is this going to be the gateway drug for crypto around the world?
Well, first of all, stablecoins are probably the one digital asset that has probably found the best product market fit in terms of its activity. And also when you consider the importance for stablecoins in the US, it's certainly under this administration, that they believe how the dollar hegemony can continue to not just sort of maintain, but actually spread and become more dominant, right? Yeah. So really putting out an act like this means that every other place and bank and so on is going to start looking at a stablecoin. I mean, I think, Amazon, and Walmart and other companies like,
that scares the banks.
You know, it's like, oh, well,
they're about
maybe
to be
we
taken
should be
out.
doing, yeah, potentially, potentially, right? Yeah. But there is also this sort of ability to really spread the use of the US dollar in a much more larger way. When you consider that Tether and Circle, I think combined, were probably the 6th largest buyers of T-bill last year. That's bigger than Japan and Germany combined. Let's think about that, right?
Crazy.
So you essentially have private enterprises buying more treasury bills than essentially the sort of 2 US sovereign allies. I mean, that says something. And you can imagine how that's going to extend even further. So you can see the importance of stablecoins and why the US really needs to push that. Which also means, by the way, that other countries in the world are just going to sit back and say, okay, let's see that happen. They're going to have to respond themselves as well. So actually, just ahead of the Genius Act, Hong Kong and LegCo just passed their stablecoin act, probably 3 to 4 weeks slightly ahead of the US, right? And we're one of the sort of sandbox participants together with Standard Chartered. And I would say to this point, that makes us still the only JV partner of an actual sort of note issuing bank or just any bank in the world, which is actually quite exciting. The very first stablecoin obviously is going to be a Hong Kong dollar stablecoin, and let's see where it goes. But of course, you know, what's interesting isn't just what's happening in Hong Kong, right? The things that happen in Hong Kong happen to an extent with the blessing of China. And when you look at, for instance, most recently, there's been some statements around saying from the government around how actually Hong Kong is an ideal place to experiment around what it would mean essentially to have a stable coin. So I think those are things that happen. Hong Kong has always been that financial gateway for experimentation for China. And even today, you can't trade stocks freely in China. You can't sort of, you know, move capital around as you can in Hong Kong. Hong Kong has been essentially this gateway all the time, which is also the reason why the US has been targeting Hong Kong. When you think about, for instance, you know, up until sort of recently, Hong Kong was a free trade part where it had different rules to China. And the US basically shut that down. Most other countries didn't follow. It was basically just the US. Why did they do that? They didn't do that because it was just about sort of, basically because of the protests or because of so-called sort of civil liberties. That wasn't really the reason. The reason why is because they were basically trying to sort of create a policy to see that they can basically create more of controls over, basically China, because they knew that Hong Kong was the financial gateway for that, right? So this is all part of sort of a larger political play. And I think because of the internet, because of information, you can see all of that become sort of more broader and more wider. It draws just so much more attention. So stablecoins isn't just simply a tool. There is a lot of sort of geopolitics, I think, ultimately involved with that as well, because of the role and influence of, their respective currencies. Now, what does it mean for Circle? Well, I think Circle has the benefit of being first mover advantage, right? So there's that one aspect. It's also very dedicated towards it. Tether is unlikely to be going IPO. They don't want to. I don't think they need to anyway, right? Yeah. And I think Tether has established itself very much as the crypto native stablecoin. And I think it will probably forever hold that place. But when you think about adoption of people who are not in crypto, which is still the vast majority of the world, we shouldn't forget that over 90% of the world actually don't engage with crypto. And for the vast majority of the people who engage in crypto, they only trade them in exchanges. There's about 400 to 500 million people who own crypto. That's a big number. Global population being 8 billion, of course. But only about 10% of those are actually doing it on chain, right? And doing DeFi type of stuff. So for those guys, stablecoins are going to be very important as a medium of exchange. For the vast majority of the world, though, how are they going to move into crypto? They're going to move into crypto through a stablecoin first. They're not going to sort of go there because they just want to buy crypto first, because how do they do that? They first have to convert it into essentially a native digital currency in the asset that they understand, which is a stablecoin. And that's the reason, we want to do the stablecoin with someone like Standard Chartered, because what Standard Chartered does also is gives the trust to the end user. Again, in our world, we take it for granted that, Circle and Tether, we should trust them because it's dollar backed. But for a normal person who's never engaged with that, they're like, wait, am I comfortable in treating and dealing with a currency issued by what appears to be a private organization, that promises that I have put essentially a one-to-one backing, even if we know that's the case, versus a bank issuing it, right? So that element of trust is still the most valuable currency that's out there. And so I actually think Circle is going to have quite a bit of competition, because all of the other sort of banks in the US are going to say, wait, hold a second, that's a great business. Why should they have all the fun? we're going to go out issuing our own stablecoin. So I think as from a macro standpoint, I think it's really good for the industry that so many more stablecoins are being issued. They're going to be pushing them to their clients, only stablecoins, and then what are they going to do? They're going to be spending them somehow in the digital space, whether it's to buy a token, to buy an NFT, to buy some assets, and also to use them in digital commerce, which is also why Amazon and those companies are saying, wait, we're commerce companies. Wouldn't it be great if they were dealing with our own currency of sorts that was essentially dollar backed? So again, it makes a lot of sense for those guys. So outside of first mover advantage, though, I do think that sort of mid to long term, Circle will have more challengers. And once the second and third and fourth stablecoin is out, and you see some numbers and you can compare against them, I think that excitement will probably start to teeter a bit. However, if I was Circle, I would use their market advantage that they have now and start doing M&A like crazy, right? This is the time when you grow, you know there's competition, use that market power, and I'm sure they're thinking about that right now.
And they have a massive treasury, so they can start scooping things up left and right.
That's correct.
How do you get out of a rat race? How do you create wealth not only for yourself, but also for the generations to come after?
I am absolutely amazed with the quality of companies that we're getting exposure to.
We go on to Zoom calls with the innovators and the folks who are building new applications in metaverse, blockchain, artificial intelligence, decentralized finance.
What's going on, everybody? Thumbs up if you can see me.
We are focusing on early stage investment.
And the quality of people that we're getting exposure to, whether it be Dan Tapiero with 1RT, Jason Ma from Open, Yat Siu from Animoca.
It's been a phenomenal experience thus far. It has far exceeded my expectations.
We are focusing on cutting edge technologies.
I view it now as the best investment I've ever made. The upside I view is unlimited.
And as a retail investor, I would never get this exposure anywhere else outside of Investment Club.
See you in the Investment Club.
But the Bank of America CEO he said even 4 or 5 months ago, as soon as that thing is passed, we're going to have our own stablecoin. And that was still early on. Now we're seeing, like you said, Walmart, Amazon, JP Morgan is doing some kind of a test deposit thing with Coinbase.
A deposit token.
Yeah. Which is wild because, Diamond has just been the most anti-crypto person ever, but also shows this kind of duality of organizations, including Goldman. Goldman always said we don't believe in crypto, but of course,
Goldman, but to be fair, Goldman has been quite early within the teams in crypto, at least in Hong Kong, where a lot of the digital asset activity was based, and of course also in London. Some of the people I know there in the team were some of the earliest buyers of basically NFTs.
But the official CEO version was they were not interested, even as recently, I thought it's 6 to 9 months ago.
But remember
whatever that means.
Yeah, but remember also, it has a lot to do with the politics of the time.
Yes, of course.
Right? I mean, you have to also look at where was the political wins literally roughly a year ago.
Okay.
Trump winning was not a certainty whatsoever.
Yes.
Right? And a lot of people basically just thought, okay, well, the fact that if you were going to have essentially, at that point, Kamala become president, then the likelihood of Gensler being out is also not a foregone conclusion whatsoever. And so everyone had to play their cards very carefully. Right?
Yeah. Can you imagine? And that would be a crazy issue. And so just to clarify what you said, potentially the Chinese stablecoin for the yuan might come out of Hong Kong and maybe out of a joint venture between Standard Chartered and Animoca.
Yeah, so obviously, this you said that, not I. But to be clear, I think that's the opportunity for why China would be interested in this. Just in terms of the actual facts, I mean, dim sum bonds today are essentially all traded mostly in Hong Kong, which is essentially basically Chinese bonds.
Okay.
And Hong Kong does something like 2 trillion renminbi a day, I think, basically, for foreign renminbi trade. So it's vitally important for them. So Hong Kong is already that gateway. And if they're going to do a stablecoin, whether this is with us or someone else, right, just to be clear, I think makes a lot of sense. However, they're going to be cautious. They're going to be careful about this. They're going to analyze this. This is why they use Hong Kong as a test bed, which is why there's sandboxes and so on. So China is going to be doing this and Hong Kong is going to do this in a very sort of deliberate, regulated, and careful manner. But when they do come out with something, I think it's going to be massive.
Okay. And Animoca in the future possibly could entertain a U.S. IPO. You obviously just got the audit done, but who knows? That's in the future sometime.
Yeah.
I mean, you got Justin Sun, who said he's going to IPO Tron in the US, which of course we love Justin. He's been on the show before. He is one of the greatest marketers ever, in marketing himself and his company. I think he would later said that was just a vehicle, like a treasury vehicle for Tron.
Yeah, but
maybe not.
I think treasury vehicles are probably the most common thing right now.
Yes.
So, for instance,
it's a new hot thing.
It's a new hot thing. Yeah. And you think about it, actually, treasury vehicles are a great way for any token issuer to essentially bring attention to your product and a way to buy them without calling it an ETF, which has its own complications.
Correct.
By essentially bringing on a kind of investor who knows about you and also essentially becomes an accumulation play. It's also a fantastic way to ensure that the business in question, provided that is a decent play, is going to continue buying the asset and holding it on its treasury as a kind of what Grayscale used to do with Bitcoin. Right, before it became an ETF, that was actually what GPTC was, right? It was essentially a kind of basically Bitcoin index that the public markets could basically participate in. So I expect that to happen in many more tokens. So I think that makes much more sense.
Okay.
I don't know that sort of Justin necessarily enjoys the rigors of a public company per se. That's not to say that he wouldn't consider that. It's just to say that, why would he have to deal with that? There's pros and cons. I think for us being a public company makes a lot of sense because we think of ourselves as a potential consolidator, right? We also think of ourselves as one that's already a public company. We have 3,000 shareholders. We have to have audited financials. We have the public accounts. Our numbers are public. So
we're public before.
Yeah, because we were public on the
Australian
Australian Stock Exchange. Exactly. So we have all the disadvantages of being a public company, but we're not getting into the benefits of the market. So of course, us going public makes a lot of sense. But I think a lot of people, just quickly on the audit, a lot of people were skeptical that we could even get a full audit done. And more importantly, this audit is essentially an unqualified opinion. Now that's really important, right? Because a lot of people sort of said, audits for crypto, it's difficult, it's murky, we don't understand it. Right? And this lays a foundation essentially for all the audits to come out, not just fairly quickly, but also with all the necessary frameworks that took a while to establish. And why this is important is that I don't think it's just us. Because the way we do accounting and deferred revenue bookings and so on is actually a blueprint for how other companies can now look at it and saying, you know what? When we have a company that's generating revenue through crypto, how do I account for that? Because remember, if you are a stablecoin, very easy. I buy treasuries, I put them on chain, and the business model is quite simple. If you're an exchange, like a Coinbase, also fairly easy. You clip a fee, right? But a business like ours, which is not just investing, but is building, launching tokens, much, much harder. How do you deal with the inventory of tokens? How do you account for them? What's revenue recognition? What's deferred? What's not? I don't think any company in the world has done this.
Right.
So I think we're the very first company to have essentially created a blueprint for how to audit a crypto company.
So that's why it took so long, because it's the first time it's ever been done.
Exactly.
And the fact that maybe the industry was shunning audits before, or also just not knowledgeable at all with what you were doing.
Well, that's the other thing. So when we were a public company in Australia, this is 2018, 2019, right? Before we got delisted in 2020. How many audit firms out there had people who understood anything about crypto? So we were dealing with audit partners who never even owned any crypto,
right?
Who didn't know anything about this. So this current auditor, Hall Chadwick, actually, they have a crypto practice and they dealt with crypto firms. So they had familiarity with it. Today, you're going to find a lot more firms around who basically know and to deal with that, whether it's an existing partner, whether it's some new people that came into the firm because they own some Bitcoin, they own some crypto, they get it. It's not some weird, funky stuff. They're not necessarily even positively inclined to it. It's more like they understand what it is and they can deal with that, right? Not that different from, when new technologies emerged, whether this was internet companies back in the day as well. Like, how do I deal with, remember back then, in the 90s, people used to value internet companies based on eyeballs. Right? They said eyeballs. That was a valuation metric. Of course, that's changed as well. But the point is that people are still trying to figure out how to do this. Basically, blockchain and crypto is the same. So we're getting to this point. And it's going to get easier and easier, not only because of the work that we've done, but also because other firms out there now have within their core of people that they've hired, people who have crypto. So it's much easier to deal with. Whereas 5 years ago, you barely had people who even heard of it within your degrees of network, never mind working with an audit partner or audit firm that actually owns any of this or has any interaction with it to be confident that they can deal with it. Like, we had to deal with questions with some former auditors were like, oh, we don't even know whether this token is real, right? Well, look at the trading volume. That could be fake. Okay, so what do you want us to do? Well, if you sell all your tokens and then buy it back, then we know there's liquidity. I'm like, is that what you do in the stock market? Do you want to prove the value of your shares just by selling all those shares and then buying it? Like, it doesn't make any sense, right? But it's just that they didn't trust it. And there's also a lot of, I mean, you've probably heard this before in the early days. It's like, oh, trading volumes are fake. It's all not real, right? And you still get some of that, right? But look, I mean, on all these exchanges, today, it's something in the order of $100 to $200 billion of daily volume trades, right? I mean, you can no longer say that is basically just all rubbish. But you will still get people who are skeptical because it's just so far their imagination that that's possible, even though that's exactly what's happening.
Okay. You spoke earlier about Bitcoin, and Bitcoin's been this incredible story that, quite frankly, has been decoupled from the rest of the market the past year or so. And so, like you said, right now we had a pretty massive action from the United States on Iran over the weekend, and Bitcoin is still above 100,000. It's at 101 and change, down from an all-time high of 12, and maybe down from 104, 105 before that action. And it's become kind of I guess could be called the risk-on asset over the weekend because not much else trades. But we've also seen Bitcoin dominance going even higher and higher and higher. I think it hit 66% over the weekend. And Benjamin Cowan, who runs Into the Cryptoverse, is a former guest. He's cheerleading it the whole way, much to the chagrin of altcoin holders, maybe like us. Is this ever going to stop? Because Bitcoin seems to be taking all the air out of the room. We have seen the Ethereum ETF pick up recently. I think it had 15 days straight. Some people say that stablecoins are the Ethereum Trojan horse into Wall Street, but altcoins have been struggling in a significant way. That includes gaming tokens. That includes lots of things. Mm-hmm. Is this going to continue? Is there any respite in sight? Or is Bitcoin going to continue to suck all the air out of the room, especially with all these treasury companies? Yes. There's 113 public companies that are now buying treasuries at the last glance. That probably means, and I'm not joking, it's probably up to 140, 150 by now of people that are thinking about it. Yes. So what is your call on that? I'm sure people ask you about this all the time, including your investors. So first of all, the whole sort of buying Bitcoin as a treasury asset, there are those who really believe in it. Right. And we just backed one ourselves called DDC Enterprises. Okay. Which country? It's US listed. US. Right? Okay. But Norma, the founder, she's Chinese. Okay. And she basically got a lot of support from Chinese Bitcoin holders to basically do this play. And it's done very, very well as well. So, and again, long-term prospect for Bitcoin, we're totally positive on this one. Yeah. But I think the one thing, and I said this before on your show to understand, is that when Bitcoin does well, ultimately, it's great for the entire ecosystem because of the permissionless nature of crypto and of tokenization. You actually don't have a monopoly effect. So as much as people say, oh, look at Bitcoin sucking out all the air, at the end of the day, when you make money on Bitcoin because it goes up, you end up putting it somewhere else. And when you put it in there, whether it's through leverage, right, which is the other point here, right? Like part of the reason why when the markets deleverage so quickly is that because they've leveraged their Bitcoin to do something else in the crypto space, whether it's DeFi or other tokens or that kind of stuff, then actually it just shows that the more money you make in Bitcoin, the more capital flows into the rest of the ecosystem. Well, Michael Saylor's not putting capital in the ecosystem. Yeah, but the treasury companies aren't putting capital in the ecosystem. The maxis aren't doing it, and the hodlers aren't doing it. They're just going to hold. But that's not true. The hodlers actually are looking at ways in which they can generate yield from this. Right? Some are. Yes, exactly. If so they can find a way. Well, and so the yield plays of Bitcoin are starting to be that next wave, right? In terms of basically doing stuff there. But they're so far disappointed. Yeah. That's because the yield, it's conservative yield. So we're talking about single-digit percentage, right? So if you want to compare it to altcoin gains, you can't basically look at it the same way. Questions about custody and correct. That kind of thing as well. Exactly. But very, very quickly, just on this point, is that when Bitcoin increases in value, at the end of the day, we might say, oh, look at how it's taking out the sort of, all the air out. But actually, really what's happened is that the sort of altcoin space has been more diluted with many, many more tokens. When you look at the total market value of altcoins, actually, they've done fairly well as well. So at the $3.4 trillion of market cap size, I think Bitcoin's about 1.6 trillion,
right? Give or take, maybe something like that.
Or 2.
It depends on which day you're looking at, right?
Yeah, okay.
But once you take out stablecoins, it was about 300 or 400 billion. The rest is altcoins, right? So that market has grown, but it's just been distributed over many, many more tokens.
Right.
The second thing is when you take a look at, for instance, and we can get into things like Ethereum and Solana and some of the big ones, because certainly I would say a lot of people look at Ethereum specifically. They're not looking at the new tokens. They're looking at Ethereum specifically and saying, oh, look how that's disappointed. And then in their mind frame, they're like, okay, well, if Ethereum's done badly, then what about all the other ones? Discounting the fact that over the last year, essentially, millions of new tokens have launched, of which at least hundreds of them have done phenomenally well, right? Including our own Mocha token, for instance, which was, if you think about it, it didn't exist before and has a $600-700 million value even in this kind of market, for instance, right?
Yeah.
Or if you look at, for instance, the launch of something like, basically the Pengu token with Pudgy Penguins, right? Sure. I mean, we believe that both of these tokens should be worth more? Yes. But again, we're talking about a token that essentially did not exist up until December of last year, and now has a value of somewhere between $600 to $800 million as well, and trading very, very actively. So we shouldn't forget that that's what's happening. And so this, to me, is the reason you look at altcoins versus Bitcoin. Bitcoin is basically your gold. So it's your reserve asset, right? But if you want to take sort of opportunities of fast growth, it's always going to be in altcoins. You're not going to have Bitcoin go, 100x or even 10x. I mean, it will go there, but it will go there over time. Do I believe that Bitcoin's worth $1 million? Absolutely. I've been saying this all the time. It's going to be one of the biggest status symbols in the crypto world to have one full Bitcoin. So I absolutely believe that. However, is it going to happen this year? Nobody's going to say that, right? But do you believe that, a token that you basically want to support or that you think you believe in, like a startup, for instance, that it could rise, 10, 20x, or even just 3 or 4 or 5x within a year? Yes. So the index to think about is, will this project outperform Bitcoin? And if it doesn't, sure, then maybe buy Bitcoin. And there's this interesting sort of theory that in behavioral economics that I think Daniel Kahneman put out under, I think it's called prospect theory. But there's multiple theories that have talking about this, which is that most humans appear to be more sensitive towards an aversion of loss rather than gain, right? Mm. So when things are dicey and you want to play it safe, it's more painful for you to have lost than to the experience of losing was more painful than the experience of winning, right? So you forget, for instance, that, hey, you know what? If you invested in Axie Infinity or in Sand tokens in 21, and you would have basically made a ton of money, but then the fact that you maybe invested in some meme coins in, I don't know, or like Trump token or whatever it is that you invested in earlier in the year, and you lost a lot, that whole category gets bunched together into altcoins, and they say, oh my goodness, that was very painful, then we'll do this. Or for instance, terrible disasters like Luna Terra, right? So you want to go into something that feels sort of more safe and less risky. Then that's where people put money into things like Bitcoin. But I think what will also happen is that there's going to be a bifurcation ultimately between what's in the category of altcoins, right? So in other words, because altcoins today is everything but Bitcoin.
Yeah, what does that mean?
Yeah, exactly. What is it?
It's a terrible word.
Yeah, it's a terrible word, right? So you have in there, you've got Solana, you've got Ethereum, but then you also have Bonk, and you have Mocha in there and Sandbox, and then you have every millions of other tokens. Yeah. I mean, that's not actually a fair definition either, right? So ultimately, you're going to have these areas where you've got your Bitcoin, then you've got your institutional token plays, which includes Ethereum, Solanas, we think also Mocha, and sort of, and then even the ones that are sort of in the meme category, like a Pengu, for instance, or even an ApeCoin, sure, right? They've been struggling in this market environment in macro, but you've got people building behind it. You've got real ecosystems. You've got real support behind them, right? And we see that as a market opportunity. So most recently, for instance, one of the gaming projects we supported was called Cross the Ages.
Yes.
Right? And I think we're both investors in Cross the Ages.
Yeah, we've had Sami Chilagu, their CEO, on the show twice. We invested 4 years ago, back in 21. Huge fans of Sami, the vision, the project.
The project works really well.
Yeah.
The game, he's had a great track record as a game developer that's made profitable games, lots of users, right?
Yeah, great community.
But the token's absolutely been crushed, right? And so you have a few opportunities. You go, well, do you look at a new gaming project? Or do you look at a gaming project that's undervalued? Which is, by the way, what people do in the stock market all the time.
Yeah.
They look at what are the opportunities out there. And there were a portfolio we spoke to them, they spoke to us. We're like, you know what? I think there's something there, right? They were at under $10 million market cap. I mean, for a company like that, which is a bargain even in Web2 sort of classical terms. So I said, you know what? That's totally sort of oversold. So we decided basically to support the project. We sort of, obviously didn't just back them, but we also bought tokens in the market. Most recently, we announced it.
Yeah.
As of the start of the year, the token is up 400%, right? So Cross the Ages as a token has outperformed Bitcoin. Now, of course, you can't make the same parallel example. They're not the same assets whatsoever, right? That's kind of saying I outperform gold. That's not the point here. But the point is that as a portfolio, I think it makes sense for you to look at different hedges, right? So you look at things that you have conviction on, right? I mean, people who invested in AI companies before.
Peter Thiel took $500,000 and turned it into $1 billion using the exact same techniques we're using inside the investment club. He met a CEO, his name was Zuckerberg. He pitched him the deal and he said, okay, I'll give you $500,000. Mark went public and sold the shares to people like you. Well, what happened to Peter? Well, he exited and got a 2,300x return. The wealthy invest in early stage companies, folks. The public markets are for suckers. It's a rigged game. By the way, this happens in crypto as well. It's called pre-sale tokens. This is Solana. Does anybody know this chain? They sold pre-sale tokens for 4 cents. And you can see the date on there, April 5th, 2018. Look at Solana today, folks. That thing's up over 1,000x. The media and Wall Street and all these hype people get you to buy the top. Meanwhile, they put their clients in at the bottom and they use you for liquidity to make their clients rich. You can play this same game. You just have to have the financial education and the deal flow. That's it.
Right? Or companies who've invested in biotech companies before. Right? These are all companies, regardless of whether they're a token or not, that can outperform the market if you have conviction and belief in them when you see that, right? And so I think a lot more of that will happen. And so I think as a result, altcoins are going to be distinguished between those that have institutional backing, like from the likes of us or other ones. Because the one thing that we haven't fully accounted for yet is that right now, the BlackRocks of the world, they are buying Bitcoin. What are they buying next? They're going to start buying things next, right? You already see all of the ETFs coming out for different tokens, right? Van Eck is pushing all sorts of interesting ETFs. Eventually, you get more and more of them. So you've got the next tier, which are the ones that the institutions can back, right? The ones that we could back, for instance, right? And then you have everything else, right? And to me, that's no different than, you've got your S&P 500, right? And then you've got essentially sort of, basically, sort of a lower tier. And then you've got everything else, right? I think we're going to see the same thing with tokens as well. But right now they're all in one bucket, partially because it's not sophisticated, which to me represents an opportunity.
One thing that I think frustrates the altcoin market, and again, we'll have to redefine that for sure, is that we see when Bitcoin rallies, yes, it pulls up, but then when Bitcoin sells off, it continues to sell off more. And if you get enough of those cycles, somebody on crypto Twitter just recently recognized that the altcoins are as low as they were when Bitcoin was at 75K, even though Bitcoin's at 100K now, because through those cycles, they had sold off even more. And so I think most people agree in crypto that actually new highs in Bitcoin is always good for every crypto.
But I disagree with that.
Is that? Are we looking at the wrong coins?
I think, so first of all, if you look at the coins from before, then yes. But what you've discounted is that the altcoin market cap has actually increased because there's more tokens in the market. Okay. But
does that matter when some random, meme coin is out there? I don't care. It's still, the coins that I think matter are still lower.
All right. So to sort of put into account a little bit the sort of what tokens do, tokens are essentially a form of pricing information, just like commodities. Just they do this from a network effect, network attention, community attention perspective as well, right? Yeah. So if a token doesn't do as well as it should in your mindset, it actually should also be indicative of maybe there's something wrong with it. So I think Ethereum is a good example.
Okay.
Ethereum is a token that has a little bit of a conflict. It wants to be a sort of store value, but it also wants to have mass utility. Bitcoin doesn't have that problem. As much as Bitcoiners would love you to spend your Bitcoin, it's simply a store value. It's HODL all the way. And things like, Bitcoin Pizza Day is probably the perfect reason why people never want to sell their Bitcoin, right? And so the whole thing about Bitcoin is store value. And so it's not confusing at all. But for Ethereum, that kind of sort of, if I want to have more utility, then actually fees have to go lower. right? As for instance, right? So that is in direct conflict with necessarily being that incredible store of value. So why and when did Ethereum really rise in value? It's kind of similar to how Solana is able to maintain its value, which is opportunity. What opportunity was in Ethereum? It was NFTs, right? When I want to buy an NFT and have the opportunity to quickly react to it, I needed to have enough Ethereum on standby so I can make the trade, right? I didn't do it because I gained like 2 or 3% staking rewards. Nobody gave a crap around that.
Right.
It was much more important that I had an opportunity to buy something that essentially gave me an opportunity in there. And so culture as an asset was really the key selling point. And when all these L2s came about, really building utility on Ethereum as a foundation because of its huge security layer and all the TVL that they had, the problem was that the tax became sort of extractive on the L2 side. What the L2s haven't done is essentially keep their Ethereum. So it's not helpful if, Base or Optimism or Arbitrum make a lot of money and then they all start selling their Ethereum. Right? So what?
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.
Most people will never see this opportunity. Dubai luxury transformation projects have historically delivered 40 to 90% annual returns. That is incredible. These were once reserved only for insiders with access. I spent 15 years on Wall Street and I learned this. The biggest returns always go to the people who get the call first. Now, you finally can. We've just received a brand new project with major upside potential. Allocations move fast. Click the link, apply now, and speak to my team. This is your chance to see what others never will.